Hello students, for today's video I will be covering problem number 3 and 4 of set off and carry forward of losses. So problem number 3 is talking about simple income from other sources and business loss. So Mr. D has his income for the previous year 24-25 and his income and brought forward losses are given as follows. First one is income from activity of owning and maintaining the race horse is 75,000. Income from textile business. He's doing a textile business and the income is around 85,000. He has brought forward business losses of textile that is around 50,000. So whenever any business is there, that business can be set off with business income only. So this 50,000 we can set off with profit. So this 85,000 minus 50,000 we can set off. Next one is brought forward loss from activity of owning and maintaining race horses of 20 to 25. Whenever there is a brought forward loss of owning or maintaining the race horses, this loss can be set off against income of owning and maintaining the racehorse. So we have income also of 75,000. So this 96,000 can be utilized to set off this 75,000. So on the basis of this premises, we will now solve problem number 3. We need to calculate total income of Mr. D for assessment year 25-26. So if we see the total income of Mr. D for assessment year 25-26 is as follows. Income from activity of owning and maintaining horse races is 75,000. So we can set off with brought forward loss of 96,000. So out of 96,000 we can utilize 75,000 and the amount will be nil. So the balance of around 21,000 will be carried forward for next assessment year till we have another profit of owning and maintaining horse races. So this 21,000 will be utilized for against profit of owning and maintaining race horses in future, and it has to be set off against that income only. Next we have textile business of 85,000 and we have brought forward losses of around 50,000. So if we deduct both, we are getting around 35,000. So total income is 35,000 because first we have nil income and second one we have around 35,000. So this is the note. Loss from activity of owning and maintaining racehorses cannot be set off against any other source or head of income. Now we will discuss about problem number 4. In this problem, Mr. B has furnished his detail of assessment year 25-26 and you need to compute his total income for assessment year 25-26. First one is salary income. Please remember salary income loss are not there, logical it is. So there will be only profit. So this profit will this income from salary income will be fully taxable. Next we have speculation business income 60,000. That is income from derivatives, futures, option around 60,000. There is loss from non-speculative business means normal business. There is a loss of 40,000. Now it is very important to remember the rule. Whenever speculative loss is there, speculation, this has to be set off against profit from speculative business only. But now here there is income, and whenever there is a normal loss of business, this can be set off against any other business, all the business, not any other, all business income including speculative business. So simple rule is that speculative loss cannot be set off against normal business. It has to be set off against profit from speculative business only. But normal business loss can be set off against any other business including speculative business, income from speculative business. So that's why this 40,000 we can set off against 60,000 and around 20,000 will be taxable. Now next one is short-term capital gain is 80,000 taxable. Long-term capital loss is 30,000. So we have to remember one rule: whenever short-term capital gain is there, sorry, short-term capital loss is there, it can be set off with short-term capital gain and long-term capital gain. But whenever long-term capital loss is there, it can be only set off against long-term capital gain. So this 30,000 cannot be used to set off against 80,000. So this will be carried forward for next year till we get long-term capital gain profit. So this will not be set off. This 80,000 will be fully taxable. Next one is winning from lotteries is 20,000. So winning from lotteries will be fully taxable. And one more point, very important point here is loss from lotteries will be set off against uh, winning from profit from lotteries only, and it cannot be set off against any other head or intra-head also. Now we will solve this problem. So this is the format: computation of total income. Income from salary is fully taxable. Income from speculation business 60,000, and we can set off non-speculative business with the speculation business, that is 40,000, and 20,000 will be taxable. Next one is short-term capital gain is fully taxable. Long-term capital loss we cannot set off against it, as I had discussed earlier that uh, long-term capital loss can be set off against long-term capital gain only. Now, winning from lotteries is fully taxable. So your taxable income is around 2,70,000. And there is a note here: long-term capital loss can be set off only against long-term capital gain. Therefore, long-term capital loss of 30,000 has to be carried forward to next year till we set off this with long-term capital gain. So with this, we have completed problem number 3 and 4 of set off and carry forward of losses. Thank you, students.